We've had a nice turn in the markets. We are green. We do have the first day of the shutdown. ADP's worst print since March of 23. Lisa Cook is staying on the Fed for now. Bitcoin and gold keep rallying, and here's where we begin Q4. We got a 13.5% gain in the S&P 500 year to date. NASDAQ up 17, the Dow up 9, the Russell up 9 as well. Joe Terranova. Actually, you know what? Not Joe Terranova. Liz Thomas. I just felt like switching it up on the fly. Sorry, you're about ready to go.
I feel like I should apologize to you.
You got demoted. All right.
Bat lead off.
Liz,
yes,
what should investor mindset be entering this final stretch?
Final stretch of the year, you mean?
Yeah.
So starting the fourth quarter, there's this seasonality. Everybody gets excited. We're going to have a rally into year end. I do think that that is a possibility. I don't know that it's going to start right now and continue unabated. I think that we're at a point after a lot of these all-time highs that the market is due for a pause, and there should be a time of maybe some of the shakeout of these valuations. Many people have been calling for that. Sometimes just the fact of calling for it causes it. But all these warnings that we've gotten about rebalancing at quarter end causing this big move out of equities and into bonds and so on and so forth just never really comes to fruition. So I don't know why we keep worrying about that. The government shutdown, on the other hand, is something that I think markets aren't necessarily going to welcome, but if you look over history, they've actually done pretty well through a lot of the shutdowns. There have been a few here and there that have been bumpy, but on average, returning somewhere between 2 and 3% in the 3 months following a shutdown. So even this isn't necessarily something to be that concerned about.
All right, Joe, earnings season is almost upon us. They're expected to be good again. The Fed is expected to keep cutting interest rates. So I hear everything that Liz said, and it all makes perfect sense about, some of the risk versus the reward. But what I just mentioned, earnings good and Fed rate cuts, and just maybe people chasing, maybe some cash on the sideline coming into the market, it's hard to get in the way of this rally, right? I mean, of this bull market.
Yeah, I think the fourth quarter will be strong for all the reasons that you cite. I think strategically, that's the big question for an investor. And I think when you look at your portfolio, don't be surprised to see a little bit of a turn, a little bit of a rotation here. We're seeing the signs, the early signs of it here, the first day of the fourth quarter. Healthcare coming back into play. Quality up as a factor. Momentum is lagging today. And keep in mind, momentum just does not mean high beta names. Momentum means the Fin 5. I've been talking about them ad nauseum. Well, over the last several days, they're not performing well. Financials not performing well. So I think that little turn within the market is going to unfold here in the fourth quarter. It's probably even going to touch the small cap equity size class, similar to the way that it did last year.
Weiss, what do you make of Bank of America's Flow Show note today? There were record sales of large cap stocks over the last 2 weeks. Sales of single stocks in the last 2 weeks were the third largest of any 2-week period since '08. It was driven by large caps. Clients sold 9 of 11 sectors led by financials, right? Joe points out a little bit of weakness of late. You had the 6th straight week of outflows, the 4th largest weekly outflow since '08 in financials. Comm services saw the 2nd week of outflows, the 6th largest on record. And sales of energy stocks were the largest since early 22. What do you make of that?
Well, look, I mean, I think you could see it in the charts of some of the companies where they had an amazing run, they peaked, and now people are saying, you know what, we missed a peak before in these names, so maybe we're not going to see a third peak. So let's take some profits. I think that's pretty normal. I don't really know what the correlation is between the Flow Show numbers and actual market performance. My suspicion is it's actually correlation is higher short term, but I'm going to look at the long term. So I still think that, fortress balance sheets, impregnable business models, they're the ones I still want to own permanent compounders. What I am concerned about, and getting more concerned about it, is that everybody seems to be on the same side of the boat. And when they're on the same side of the boat, that boat wobbles. Sometimes it goes over.
I guess because yesterday I said the same thing on Closing Bell. We had gotten like 40 minutes through the program, and through the 3 panelists at the top and 1 towards the bottom of the program, everybody, no matter what their discipline was like, markets kind of hard to get in front of here. It's set up pretty well into the end of the year. You had Goldman raising their forecast for global equities the other day, right? But sometimes the crowd's right.
No, I agree, and that's why I'm staying long.
You need to get a bigger boat.
Yeah, we exactly, and a more stable boat, maybe a tri-hull, because to balance it. But that is my concern. My other concern is that as we're going into the quarterly earnings, which will hit in earnest in about 2 weeks, we're going to really hear for the first time the impact of tariffs, and somebody's got to absorb them. We're hearing news that comes out saying, hey, Nike, big on tariffs, huge hit to them. So who's going to pay that? So, and if consumers pay it, the other point is that
Nike's up, by the way, almost 6%. So they can have whatever impact they want.
It's from such a low base. Look at the stocks.
Sure, but it's still up 6%. And many companies, we've long stated that one of the greatest things about this country and these equity markets is we have the best companies in the world and we have the best CEOs in the world.
True.
And they figure it out. They figure out how to run their businesses through thick and thin.
Right.
Maybe they pass on a little here. Maybe they absorb a little there. Maybe they tell their distributor, you know what, you're going to have to eat some. They tell their importer, you're going to have to eat a little bit too. And then when you add the pie up, it's not so disruptive to how the whole thing looks and tastes.
And I agree with that completely, but I think it depends upon what your company's end market is. So there are two levels of consumers here, and the gap's widening. And that's not a social comment or anything. It's just factual. So we've got a number where we hear that they're living right now. They've always lived paycheck to paycheck. That's about 60% of consumers. But now it's getting tougher for them because of inflation, because of increases in grocery costs.
I got something for you coming up on that, too. Go ahead.
So that is the issue. So if you're playing to them, I think you could be in for some rough sledding.
Okay. So on that note, maybe all of you have seen these consumer finance names. They're in focus because many of them have not performed well. Sort of on the lines of what Weiss is talking about. And he's not the only one talking about it either. The question is it the start of something to be more concerned about? Joe, Capital One's down 5% this week. Affirm is down 15% in a month. Klarna is down 9% this week. Upstart's down 18% in a month. The FT has an article today about subprime auto delinquencies up 9.3% in August. CarMax talked about elevated loan losses in some areas of their loans. That stock is down 27% in a month. BTIG looks at all this today, especially the consumer finance picture, and they ask smoke or fire? Smoke or fire? And what it says potentially about where the consumer is and whether the market is simply too complacent because it's drunk on the idea of good earnings, Fed cuts, and AI overload.
So you mentioned before, maybe we need a bigger boat. Maybe we're ultimately going to just have another boat. And the challenge when I say maybe we're going to have another boat is the boat that we're going to leave is the boat that you're talking about. The names that are levered to that strong economy in an environment where the economy is clearly decelerating. In the new boat, you could put your Mag 7 names, you could put some of the healthcare names, some of the quality names, but the consumer-oriented finance names are reliant on the strength of the economy. And the economy is clearly right now deteriorating. Keep in mind the government shutdown. While everyone would like to say the market's going to overlook it, okay, a protracted government shutdown probably means the unemployment rate with 600,000 government workers approaches 4.7%. That's a problem. Look at the airlines and the way the airlines are trading the last several days. They're trading understanding that leisure travel is going to be more challenged in an environment where the economy is contracting further.